Some cunning business owners can and will try to deduct anything and everything that could even somewhat be thought of as a business expense in an effort to reduce their tax obligations. Tax authorities normally do not deem these write-offs to be valid or even legal, but that did not stop these folks from attempting them. However, not everyone can use the goods on this list. These are particular instances. To avoid getting into trouble, everyone should speak with their tax expert to find out exactly what expenses and taxes they may and cannot write off. Here are 10 odd tax deductions and write-offs that some people can and have used in light of that. Number 10. Infant oil. Babies should use baby oil, right? In order to avoid rashes and the like, it is used to moisturize the diaper area. Did you know that bodybuilders also adore it? It's not just perspiration that makes bodybuilders look wet and glistening when they display the years of effort they've put into competing. Under the spotlights on the stage, they use baby oil to make their muscles shine. Some bodybuilders rely heavily on the prize money from these competitions as their main source of income, and one important factor in their success is the oil they use. This has allowed some bodybuilders to write off their large-scale purchases of baby oil as a business expense. In addition, they were able to deduct the cost of their protein supplements, gym memberships, and training gear. Number 9. Daily meals. You may have heard of workplaces that frequently take employees out to lunch and then deduct that cost as a business expense. After all, while the participants are eating, work is still being done. A fantastic method to establish strong bonds with customers and business partners is to share a meal together. A real estate broker, however, attempted to claim a tax benefit for routine meals that she ate alone at eateries. She reasoned that since she was still wearing her name tag when she left the office for her lunch break, passersby, or potential clients, could approach her and inquire about her work while she was eating. This didn't work because her tax counselor gave her some straightforward advice: remove the name tag. Number 8. Offices at home. Everyone would prefer to work from home since it puts them closer to their loved ones and the comforts of home and eliminates the need for a daily drive, which saves a ton of time, money, and gas. There is a way to save even more money, though. You can deduct the cost of upkeep if you're so dedicated to working from home that you've created a personal workspace, whether it's in your office or garage. Let's say, for illustration, that 10% of your home is taken up by your office. This implies that you can deduct 10% of your utilities, including gas, heating, air conditioning, electricity, internet, and even gardening. That sounds like a good plan. Many of us have a deep affection for animals and welcome them into our homes. Some even refer to their pets as furry little children. They may also be small tax deductions, depending on the situation. If your pet performs a task for your company, such as a sheepdog or a pest-killing cat, they and the supplies needed to care for them are considered business expenses. These positions can be almost anything, including mascot, watchdog, and emotional support pig, among many other possibilities that you might consider with your tax advisor. Number 7. Pet supplies and food. Many of us have a deep affection for animals and welcome them into our homes. Some even refer to their pets as furry little children. They may also be small tax deductions, depending on the situation. If your pet performs a task for your company, such as a sheepdog or a pest-killing cat, they and the supplies needed to care for them are considered business expenses. These positions can be almost anything, including mascot, watchdog, and emotional support pig, among many other possibilities that you might consider with your tax advisor. Another way to apply this tax evasion technique. Your dogs and their supplies can be deducted as a business expenditure if you get a job that makes you move to a different place. The relocation could be unplanned, and moving your animals, who are important business partners, to a new place can be difficult, especially if it takes them some time to get used to it. Number 6. Two-wheeler motorcycle write-off procedure for business mileage. A motorcycle certainly seems to be the height of luxury. They were designed to be flashy, loud, and swift. With all the meticulous tuning and maintenance required to keep them in good condition, they may also be incredibly expensive. Additionally, although motorcycle insurance is typically less expensive, every time you ride your bike, you are still taking a risk. However, you can deduct it as a travel business expenditure if it serves as your primary form of transportation or accounts for more than 50% of your daily commute. So, yes, show off that hog to your boss and coworkers, but don't forget to put on a helmet. Number 5. Implanted breasts. Some of you out there with less typical vocations may be reading this post and asking, what can I write off that's special to my line of work, after reading about bodybuilders with baby oil and business owners with guard dogs? Here's another case that can give you an idea. Chesty Love, an exotic dancer, was able to deduct the cost of her numerous breast augmentation procedures off her taxes. She asserted in court that her breast implants could be considered a business expense because she discovered that the bigger her chest got, the more clients she attracted in a total power move. Number 4. Water feature. Can a pool be deducted from taxes? No way. Someone got off easy on this one, am I right? Even though everyone would love to have one in their backyard, nobody actually needs a pool. A below-ground pool is a luxury. Right. Actually, the pool and the costs associated with maintaining it can be written off as medical expenses if you can persuade the IRS that they are a medical necessity. A pool or hot tub are ideal for treating some illnesses, such osteoarthritis, which call for submersion. Additionally, it's a fantastic bonus if you wish to hold gatherings for your family or community. Number 3. Children working as employees. How to save taxes by hiring your children for your business are nepotism, a particular form of privilege that many people find annoying. These days, being a blood relative of someone with a wealthy parent is the only qualification for a high-end job or admission to a prestigious school. Whatever your opinion, the American business community aggressively promotes nepotism, particularly among smaller companies. They don't have to worry about taxes being deducted from their salary if you hire your child and their income is below a specific threshold, nor are they obligated to submit taxes. Young people and the parents who employ them stand to gain significantly from this. They not only earn a respectable sum of money tax-free, which is likely far better than the average allowance, but the experience also provides them a head start on the rest of their lives. Who better to hire than someone you know better than yourself for the parent who hires them? A parent knows their child's limitations, abilities, and how well their personality would gel with consumers, so there is already a lot of trust and expectation generated by their familial relationship, which should make for a fantastic employee. Maybe nepotism isn't all awful if it's done properly. Number 2. Haircuts. We should care about our grooming habits because it shows others that we respect ourselves and societal norms. Appearances are important. However, maintaining our appearance costs money, and money equals taxes. Everyone gets haircuts, and everyone pays taxes on them, with the exception of some. Another one of those really precise write-offs that only a select few people with privilege can get away with, and who is more fortunate than former President Donald J. Trump. When his financial situation was looked at throughout his term, they discovered that he had managed to write off an incredible $70,000 simply for keeping his outrageous hair. Additionally, it applied to tax-free gels, sprays, dyes, and anti-baldness treatments, not simply haircuts. How did he escape detection? Because they were associated with his main source of income, his public presence. Number 1. Criminal offense. This is less of a product than it is a peculiar fact for criminals. Any income derived from criminal behavior is subject to taxation. That came as a surprise. Bank robbers must pay taxes on the money they stole. Even worse, if money made through criminal conduct is taxed, it is also deducted from taxes. Even if a business is illegal, the same regulations still hold true for commercial expenses. This indicates that a criminal is entitled to a deduction for anything they legally buy to further their illegal business or to help it. For instance, a drug dealer might theoretically deduct the firearms and ammunition they purchase to protect their stock as a business expenditure. But make no mistake, the money that criminals may save if they tried this would be insignificant in compared to bail or the costs associated with a conviction and subsequent sentence. Additionally, it would probably be very challenging to be a tax-paying criminal for an extended period of time because maintaining a record of one's income and expenses is the definition of a paper trail. Never forget that American criminal Al Capone, who gained worldwide notoriety, was ultimately found guilty of tax evasion.